Jules, you're munching down over there, Jules. Hello? What's up, Big Matt? Hung around with the fam, the dogs, barbecue, relax. Normal chill 4th of July for me these days. How about you guys? My God, at night, they literally do a fireworks show right over here. And my dogs go ape shit. So I spend the night trying to talk them off a ledge. Jules, the fireworks, they bug out, you know? Most dogs do. They don't like they get crazy. Yeah, most dogs. So other than that, would you go out? Would you go out Friday night, Saturday night? A lot of people out Saturday night. Oh, I need this phone. Hold on. A lot of people out there, Matt. Everybody's been caged. A shooting, Jesus. That's the thing. You got nut jobs out there now. That's the problem. Absolute nut jobs. You get a little liquor in them and that's it. Wow. That's ridiculous. Yeah, you get a lot of stupid people. Long Island, New York in general, even Manhattan. People crazy, you know? They've been locked up in their house. They're nuts. They got an excuse to wild out now. That's why I don't venture too far. I don't venture too far away. The bunker, yeah. I got everything I need at the bunker. I don't need any headaches, additional headaches at this point in my life. Jules, all 2 pounds of her, whatever the hell she is. All right, any significant market news, company news over the weekend? Anything go down? I heard about that recent China IPO. Having trouble, right? These China stocks. DD or whatever the hell name is. Yeah, well, I mean, Friday, you had that just runaway into the afternoon, created a lot of heat in itself. DDYMM and BZ, staying away from all those names. Those are all Chinese. We've been talking about that for a while now. These Chinese names are just, they're landmines. You know what I mean? They're landmines. And there's a couple, there's a few decent names. Who knows about the companies themselves? But as far as stocks are concerned, there's a few of them that I would sure like to buy, but every week there's more news. You're always dodging negative news. Like this thing just came public. This thing just came public. Wasted no time. But you got quite a few decent companies out there, decent stocks. Like this Billy, the ones you guys like, the Animal Futu, that they set up nicely off dips, but they're dangerous. They're made for options. JD, they're made for options because you can walk in any morning and you can't be surprised by some negative headline or some short report or, they're tough. Yeah, JD is known as one of the better names. Billy too. I'm talking about even just companies. You got some major brokerage firms behind these names. But I tell you, I wouldn't be caught dead sitting in a decent size equity position in these things ever. Ever.
Rising to 94 by 9% for New Zealand. That's up from the prior.
All right, futures are open. Nothing going on. Quiet. Dow futures up 20. Now ES flat. NASDAQ down 14. All right, we'll just give another 30 seconds. I see people popping in here, and then we'll get rolling. Pin. This, and what else I want? Where'd it go? Okay. All right, welcome everybody. We'll get rolling now. I'm already recording. Let me double check. That looks good. All right, and a couple of things I won't let this drink too long today. I'll let everybody get back, finish out their holiday weekend. A few things to cover though, because we are coming off some heat last week. Okay, another strong week, especially to close out the week on Friday. You had a lot of things lined up behind the week. One of them, seasonality, which we were in pretty much a sweet spot as far as seasonality is concerned. That takes a little dip this week and then improves each and every week to finish out the month. All right, so this is the weakest seasonal week out of July usually, and then it gets better from there. I think last week, if I'm not mistaken, was one of the best weeks. All right. What I did to basically just break it down, make it a lot easier for all of us here. this is kind of where what sentiment looks like, how it lines up going into the week. All right. And, anytime, and you take a look at, this is the move here, right? Like from this little shakeout, this has been a really nice move. Okay. Basically in a straight line. So any piece of good that we were seeing off this dip, and that's something we spoke about. These shakeouts, even though they last a couple of days, they've been extremely constructive. Why? Because it's kept sentiment in check. They've been extremely timely, right? This is another example this week here, where if this market wants to magically keep the train, keep the chains moving, as we say, we need a breather here. Okay. This wasn't as, as dramatic as this run. This one had a little more gusto behind it. This one did have more breadth behind it, more names involved. But you could see here, we got a little too hot there. You got Pink Panther, as we like to say, the pink bars, and then boom, shakeout, shorts come in. You get some noise behind it, the Fed tapering, blah, 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 rates going higher. Who knows what the hell they come up with each and every time. But a lot of constructive things on the sentiment side, and sets up a move like this, So we're here again now. And it basically, what it comes down to is, if we want to see this continue, right, with nothing too dramatic on the downside when it shows up, we need some sort of shake and bake or breather here. Okay, we need it. And we'll talk about, because that's in regards to the indices. All right, because underneath the hood, sector by sector, name by name, it's a whole different story. All right. But the indices are important, even if we're not playing them, because they have a big impact on sentiment. All right. A lot of people look at the indices to get a grasp on what the market may be doing. Right. That's where a lot of emotions are generated. So we really want to see these. We want to see the major indices, S&P 500, NASDAQ, chill out a little bit here, either by chopping around or a quick shake and bake like the one we just pointed out here, right? Something like that. That was supposed to be a circle. All right. But here is why. Okay. I'll show you what the signals look like, and I'll tell you exactly why we need that little pause here. All right. So these are the key signals we look at in the Steamroom, both on private Twitter and in the Steamroom, on a day-to-day, week-to-week basis. Okay. These are short-term as far as time frame is concerned. This is an intra-day indicator, and I wanted to talk about this, especially for those of you who are members, so you understand exactly what went on there. If you remember, somebody had a question on the course regarding this specifically, and we went over it. The anti-VIX is a measure of aggressive buying and selling in the VIX on an intraday basis, okay, during the day. So when we get a sell signal, which is a high reading, that is a high reading on aggressive selling of VIX. All right, so meaning players aren't nervous, okay, and they're selling volatility. Okay, so when you look at it the way we look at sentiment as a contrarian, that would be bearish. Okay, on the bullish side, obviously, if we get a bull signal or a low signal on the anti-VIX, that means they are aggressively buying the VIX, which tells us the likelihood is they're nervous. There's concern out there. All right, and that's a bullish signal. Now, the key thing to remember, though, is it's measuring the VIX, okay? It has nothing, no idea what the S&P 500 or the Dow or the NASDAQ's doing. Okay, it's measuring what's taking place in the VIX. And there are times, okay, not often, but there are times where we can see the VIX and the indices trade higher together, right? Which is rare, but we've seen it before. It's happened. Okay. And what we saw on Friday, as the market was rallying and we got a sell signal on the anti-VIX, okay, the VIX actually started to rally and the indices really just continued to move higher. See this? So we got a sell signal, I think it was late morning, and the market went into a little bit of chop, but then continued higher. But look at what the VIX did throughout the afternoon. This is about 11 o'clock right here. Right? So you see what I'm saying now? Let me get the drawings off. All right, so this is the VIX intraday, and this is SPX. Both moved higher. Okay, so that's the problem with trying to use the anti-VIX as a short signal. Okay, and as a lot of you know out there, okay, the anti-VIX is anti-VIX. I'm anti-short in bull markets. And this is just another reason. Okay, it's more of a sign for us to become a lot more cautious as far as new entries, new money is concerned at those levels, because the probability of a wash goes up on an intraday basis. Okay, but it is not a shorting signal in a bull market. All right. So if you got short the S&P 500 off the anti-VIX, you were talking to yourself and you got run over and probably stopped out. Okay. If, you did what I did or what, a number of us did, just sat back and did nothing, in regards to new entries, it didn't cost you any money, right? Yeah. Okay. You're angry. The market continued higher, but that's the rare occasion where the VIX moved higher with the S&P 500, right? The more common scenario is if the VIX starts to move higher, the markets will at least chop around, if not go lower. Okay? So I just wanted to point that out because a lot of people saw the sell signal on the anti-VIX, and then the anti-VIX actually cooled off a bit. It didn't finish in sell signal, and there were some people wondering why when the S&P 500 closed at its highs. It's because the VIX closed well off the lows. You understand? Well off the lows. So, understanding what these things are telling us, it's important. Okay? It's important. Right? And like I said, the more the usual scenario that plays out is you're going to get a rinse or some chop in the indices at the least when the VIX starts to move higher like this. Sometimes in bull markets, you get the rare occasion they both move higher. Okay? But I just wanted to go over that, especially for those of you who are members and we watch this on a day-to-day basis. Regardless, it finished, above neutral. Okay? Squeezometer, 66 bulls, 66% bulls, right? That's another intraday indicator. So that's on the hotter side. All right. So what this tells us in simple English, 66% of players out there are bullish, right? We rarely, at hot points, you get low 70s. But when you see this, again, that's a number that you want to be aware of. You want to be cautious on any new entries, especially with the indices. Okay. And then our key end of the day indicator, short-term indicator, is our tactical indicator, which somehow, some way has avoided sell signal throughout this whole move, and you've had some big key names rally in this rally. You know, Apple, Nvidia, a lot of retail favorite names out there. This could have easily flashed the sell signal earlier. It didn't, because there was still a decent amount of people still suspect of the rally with the Fed and all the stuff behind it, the noise behind it. But we did finally get that Friday off that ramp. All right. So again, what it tells us, it's not some button that flashes and tells everybody to sell their stocks. It's not a magic crystal ball, but what it tells us is that the risk reward on any new entries from here is poor, plain and simple. All right, the likelihood, the probability, the better odds out there are that there's going to be some sort of consolidation or a rinse sooner than later. Okay. Now, what can happen during melt-ups is you get caution on these indicators and the market continues to run through and rally through. It's happened before. Okay. But what I'm going to tell you is when that happens, it becomes a bigger problem, a larger problem. Okay. Because what happens is now everybody goes from extreme bullish sentiment on the tactical side to now getting sloppy, right? You got people chasing and buying anything they can that's green. You get aggressive selling in the VIX, okay? And then you get one of those violent washes, you know? So if we continue higher through these caution signals, that's something we got to keep an eye on and be prepared for a more violent pull than just something like this. Okay. So this market, we've been talking about it constantly. Incredible job this market has of every time we get to this point that we're at right now, we've got a quick, beautiful washout with some noise behind it, with some news behind it to scare the poop out of everybody, thinking the bull market's dead, right? And then what happens? Shorts come in. They think the music has stopped, right? Everybody sells their longs. And then, boop, the market gets right back on track. And everything is beautiful again. All right. So we're at a big spot here. And a lot of things are lining up, right? You got an upside niner. You got sell signals across quite a few tactical sentiment indicators. A lot of things line up. Okay, a lot of things line up. So something to keep an eye on here, and we want to be careful, especially with the indices. Okay, names we're going to talk about. We're going to spend more time talking about names and sectors here because, yeah, it's been as crazy as ever rotation out there. But let's go over the rest of them while we're here. Future sentiment. Believe it or not, the S&P 500's at a sell signal. NASDAQ, not yet. All right. But the NASDAQ was really out of favor at the start of this rally, as most of you remember. Okay. Intermediate term sentiment, right? So we talked about over the short term, intermediate term has more of an impact when you start to see signals line up. There's nothing there to worry about yet. Okay. Now, again, going back to the point, if the indices just continue to go higher through this, they run stop signs, as we like to say, you're going to start getting bearish signals here and it becomes a problem. Okay. Because these end bull markets, right? That's where corrections come out of a lot of times. This, and the reason why we call it tactical and trading sentiment, is because it's short-term stuff, right? You get one nice sell day and it'll wipe out all of this. Okay, this takes a lot more work. All right, so we don't want, a lot of good has come from the dips, the timely dips we've had. keeping intermediate term sentiment in check. If you want this rally to continue, you want that to remain that way. All right, so everybody gets excited about a melt up. If you're a bull, you don't want that. It's not healthy. It's not good. Okay. Positioning. Oh, I didn't go over this. So you got fear, greed, neutral, Goldman Sachs indicator, neutral, the Bover bull bear, neutral. Okay, so nothing there outside of AAII. Oops. On the, I'm losing my voice already. On the positioning side, Sharpie riffraff, neutral, unchanged week over week. You do have Sharpies going back into a hedged position. All right. Reason why this didn't react, the riffraff side, the retail side didn't have a jump as far as bullishness is concerned. All right. But the Sharpies have gone back into a hedged position. VIX positioning, that's another thing we've been talking about. Savior to this bull market. Nothing there, guys. Nobody off sides in VIX. Nobody off sides. And I'm telling you, it's got a lot to do with these timely dips. If we continue higher, you're going to see bulls get cocky and start shorting VIX if it rolls over from here. And that's where, that's where things like this happen, right? Okay, the market here, needed to shake out this. It didn't, and it just, almost went parabolic here, melt up, right? Bulls got sloppy. They thought free money shorting the VIX, and you get this. Okay. So that's where, all the big volatility, that's where it usually stems from. Outside of exogenous events, okay, you get positioning, players caught off sides in VIX and in the S&P 500. That's where these big volatility, rounds of volatility come from. Now, here's what it looks like. I put it here. Oh, this is my regular Twitter. I think I posted on here too anyway. Okay, so this is what it looks like. If players were caught offside here, what you would be seeing is the opposite of this. Okay, so consider this the smart money, and this is the retail money. Okay, the smart money would be buying VIX if we were set up for a big spike in volatility, and the dumb money would be selling VIX. It's been the opposite. It's been the opposite. Look at, right? The total opposite. And, what does that tell us? That tells us that even though people are bullish out there, you're in a bull market. Of course, you're going to have more bulls than bears. It's not that euphoria that, a lot of bears want to spread. It's not that we can't lose in this market feeling. They're buying protection. So they're getting long, but they're insulated in protection. Okay, so you can get little pullbacks, you can get chop from that setup, but for you to really get a downdraft and a huge follow through in VIX, you need, like I said, an exogenous event. You need something bad to happen out of the blue, a COVID-like event. And even then it would be difficult, because there's, think about what happens when the retail crowd is shorting VIX, right? You get a pop in VIX, they got to cover. That adds more fuel to the fire. Now people have to scramble to put on VIX exposure because they were short. So now not only are they covering, they got to get long VIX. That's where you get those crazy moves. Okay? It's the opposite right now. The opposite. All right. So the good thing, even though we have some heat out there, okay, the good thing is it's not like we haven't been here in this bull market before. We just needed to cool off here. We needed to cool off. Okay. The risk is that the indices melt up and breadth is poor. That's what we've been seeing, right? Breadth has been great for the majority of this rally. Breadth really started to deteriorate late last week. Okay, the same names going higher: Fang, Nvidia. All right, when that continues, that's where problems stem. All right, so we want this thing to chill out here as far as the overall market is concerned. Okay, for me, there's a bigger thing out there that I think we should spend more time trying to look for clues and trying to figure out than what the S&P 500 may do from here. Either way, okay? Because rotation under the hood has been where all the opportunities have been, right? Even though these markets have been strong, right? The aggressive rotation into inflation and reopening stocks, right? That rotation set up such a, I mean, you can't draw up a more beautiful setup for the NASDAQ and tech off of that, right? And that's where, I mean, look at the moves in these tech names. You know, look at the moves. Look at the entry from that spot, right? So we just got a tech sell signal just Friday. Think about that. That whole entire move we just saw from bullish signals in tech. Okay, this whole entire move, we just got a sell signal. All right. So now what I'm looking for clues that it's getting out of hand now the other way. Okay. And the problem is, as much as we want a setup like we're seeing here in tech, even though it's unwound, it's not as offside as this setup was here. Okay. Because you know what's happened during this rally, as the inflationary names have come in, materials, commodities, all that stuff, bulls have been stubborn in those value names. They haven't capitulated completely. You know what I mean? Here with tech, you guys could probably all agree with me, it was complete, and growth, complete capitulation. Complete capitulation. Nobody wanted to even look at tech. Forget about thinking of buying it. They wanted nothing to do with tech. Right? As a matter of fact, all right, we look at the client fund flow. Last week was the first week of inflows into tech over the past 2 months. Think about that. The first week of inflows into tech. Tech sees inflows every week. It's unheard of to not see inflows coming into tech in this day and age in the market. That's how much they hated tech. And you want to know why the move has been so violent in names like Nvidia and stuff like that? Because nobody had exposure to them. Nobody wanted them. AMD, it got to the point where it was on everybody's do not trade list. Nobody wanted these things anymore. So once there was a catalyst to where they can buy these things again, everybody needed to buy because nobody had it. You understand? That's why it was so violent. That's why this rally's been so violent. Okay. So the reason I'm making that point is that even though we're seeing, we got some signs that over the short term, on a tactical basis, it has been overdone in a bunch of tech. not overdone to the way it was with reopening and inflation. You understand? Not to that. It's more of overdone on a tactical basis where they may need to breathe. And then, honestly, they might be the place to go again. They might be the place to go. All right. And the reason I'm saying that, okay, look here. Like the only thing that really saw capitulation were industrials. That was the only thing that lined up off this downdraft, this pullback, similar to what we were seeing in tech. Okay. The others, now this is, I should have explained what this is. This is client positioning over a 4-week period. So a month. Okay. An average of the last month, right? We get week to week. Tomorrow, we're going to get another update. Okay. Look at materials. They're still up there. Look at this. That's how bullish they were, guys. That's how much money came out of tech and growth and went into these groups. Materials, which just had a pullback, a decent wash, is still up here as far as on the long side of positioning, right? Financials, still up here. Okay. So the point I'm making is it's not similar to the tech setup. Tech, look at tech right now. Flat. Okay. Tech was like this, if you remember. And tech never gets like that. Ever. Ever. Tech is always somewhere on this side. Tech looked like the industrials, worse. And now it's back to exactly even, flat. Right? So, and you look at the other ones, right? Financials, energy's been climbing the ladder little by little. That wasn't even up there. This is moving up energy. But materials, financials, and industrials, those were the top three. All right. So the only one that is setting up, for an unwind are the industrials out of all of these groups. Financials and materials, commodities, they're stubborn. They're stubborn. Growth went from positive to negative here. All right. So this is over the month, okay, client positioning. So it's a little longer term, I guess is the best way to put it, as compared to what we look at here. All right, so you could see here, right? All those hot sectors, that pullback, buy signal materials, buy signal financials. Tech, here's tech down here. Look, that was our tech buy signal. Industrials, same thing, sell to buy. Okay, so when these things, we spoke about this, if you remember, Steamroom members, this told us they should at least find a tradable bottom here. Okay, they should find some buying here. Doesn't mean they have to go back to overheated territory. They could. Okay, but again, the reason this tech setup was so strong is because it was a complete shakeout, completely. So now let's say, I'm going to give you a scenario. Let's say tech finally starts to breathe, okay? And they rotate back into these guys, okay? And you see some lift here, which is certainly possible. Okay. I think this ends up becoming tech and growth become the setup again when it gets to that point. Because if they do rotate out of tech now, right, over the next couple of weeks, and we're going into earnings season, so we'll see what it looks like. What's this going to look like? Right? If they start selling tech from here, you're going to get right back to here again. You understand? So we need more information to come up with any strong rotation out of this. Okay? There's no great setup out of this. No great setup. The only thing that I see on a tactical basis is tech being overheated and they start to pour some money into other groups. Okay. And that being earnings season, we can certainly see that scenario playing out. Okay. So it could be a couple of days, the semis get hot. Then biotech might get hot, right? The financials are strong off earnings for a couple of days. So it's more of aggressive moving around than that one or the other we've been recently seeing. Make sense? So how is this you form an actionable plan into this? For me, being that we're not too far away from earnings season anyway, I think you look for opportunities on dips on all these other sectors that aren't overheated. Right? Like you guys like to trade the semis, okay? Nvidia's hot. AMD got hot, but LRCX has been consolidated. You understand? So there could be trades in these things right now ahead of their earnings. You understand? Trades. But unfortunately, what we all want, especially, coming off what we just saw, we want a setup like we saw here with tech and growth. We just don't have it the other way. We just don't have it. And, you got some big wigs out there like Kalanovich talking about, listen, it was all fun. You had some fun. Great. Go right back into these guys. Don't get fooled. All right. Kalanovich is out with a note Friday and said, stick with the cyclicals, stick with the value. This was just a big growth squeeze because players were, it got ridiculous, guys. It got ridiculous. People thought just buy anything related to higher rates, and it was a lock. You were going to make money, right? It got to that. I mean, even us, luckily we were earlier than that, but we're looking at, duration plays, right? Like, think about when we started to look at that, it got to a point where everybody was looking at that. You understand? Everybody. Significantly offside. Right? So that's what I see. I see opportunities in the other groups. Be mindful. You don't, like, if semis get hot, right? The cyclical semis get hot for a couple days and you see this get back up here, be careful. You know what I mean? Be careful on entries there. But off dips, I think, is where we're going to find opportunities on a tactical basis. Energy, all these things, I think this is the one you got to be careful of. That's the one we got to be careful of. And on a name by name basis, individual names, they all don't look like the heat we're seeing in the indices. You know, there are names, like a lot of names, even the growth names, they started to cool off. You know, the names that started as higher, the names that we saw the first batch of flow in, look. You know, a lot of the growth names, right? The ones that we got all excited about, they're already started to cool. So that's what I'm thinking, you know, especially too, we're going into earnings season anyway. So we want to look for tactical opportunities. Tactical meaning you, right? Monday, you get some sweeper activity in you, even short dated, the better. That's what you're looking for now. You like the entry for a trade? That's an entry for a trade. Right? You got the breather here. That's your entry for a trade. But again, trades, right? We want to keep in mind trades here. Because this go around, you don't have that wind at your back that you had with tech from where we started. You know, but we should be able to find trades here. You know, and another thing that may outperform, you know, keep an eye on like the small caps, which have lagged significantly. Right? I mean, look at this. Shorts. SPY shorts, there's your squeeze right there. There it is, right? Like, look at this, right? They come in and they short, and here's your squeeze. Okay, so there's not much left. Where's it? Oh, hold on. NASDAQ. But IWM, you know, this, I think IWM has got a second half rip written all over it, in my opinion. It's just a matter of when this happens. You understand? Like, it can stay in consolidation for a bit more, and then I think come like fall, there could be a, you know, a monster move, monster re-rating and catch up in IWM. You know, the question is where, you know, where? That's what we've been asking ourselves. You know, is there another dip before that? No, because this thing topped out in March off that massive rally. It had to do something like this. The rally was ridiculous. You're getting closer to the end here, in my opinion. You know what I mean? You're closer to the end now. I don't know, you know, what needs to happen anymore for IWM to rally. I don't know. You know, what growth, we tend to see a lot of the growth names do well when IWM does well. IWM company feel the inflation. What inflation? But what inflation? If there is, what about if there isn't? You know? I know. But I'm saying, there, think about this. Like IWM, we talked about tech. Nobody wanted tech for the same reasons. Nobody wanted tech because of rates. Okay? For the same reason, nobody wants IWM. But meanwhile, look at this thing. What about they need to buy IWM again? I mean, if rates were the reason, rates sure aren't a problem. And again, we got to remind ourselves, we're talking about there's inflation and then there's just Goldilocks rates gradually rising. That's not a problem. And again, that's what happened. Everybody took higher rates as hyperinflation coming, and they sold the living shit out of tech, and they bought lumber and they bought every commodity they can possibly get their hands on, right? Because they automatically assumed the rates are going up, it's inflation. There wasn't too many in the Kathy camp, right? Where Kathy Wood saying people have it all wrong. Deflation is the bigger problem. There's no way around it. You know what I mean? And if that's the case, you're gonna see a lot of these things get unwound. A lot. So that's my point. I can't predict what rates are going to do. I'm just talking about positioning. Everybody was positioned for higher rates. They still are. What they've done is just they took it back a bit. That's all they did. It was so extreme. You understand? If Kathy Wood is right, you have no idea. This didn't even start. This was just the tiny little piece of the beginning. If Kathy Wood is right on her thesis, that deflation is the bigger concern because of tech, age, people's age and shit like that. Right? So, that's the thing to keep in mind. Trust me, I'm not trying to predict rates. I have no idea. I'm just talking about positioning and what we got to look for. So that's why, you got a big short position in this. And I think it was Sil who mentioned it. All the reasons people are afraid of small cap. But, if that doesn't play out, you're going to have a pretty nice scramble into small cap. You know what I mean? So again, things to keep an eye on here. You know what I mean? Things to keep an eye on here. But a lot of us, not we're hoping, but a lot of us let's be honest, the majority of us botched this last rotation back into tech, considering what we could have done. Okay? We were talking about it every webinar, we mapped it out. We were telling ourselves now is the time to look. Okay? And even though we've traded through it and made some money, we botched it. Okay? Because considering the moves on these things, you could have made a decade in a month. A decade we could have made. Right? I'm sure you all agree. A decade in a month. I mean, all these names from where they were coming from, and granted, listen, I'm not taking away from anybody. A lot of you guys traded these names. A lot of you guys, I'm just saying we could have all been more aggressive and reacted better once it started to be put in motion. Once we started to see, and that's the problem, right? All the noise out there, it gets, even though we're seeing it happen in front of our eyes and the things that truly matter, flow, positioning, and price action, that's all that matters. We're hearing in the background how all of it cannot be true, cannot be right, right? How the hell are rates not going higher with the economy reopening and all the shit going on? And not only did they not go higher, they went lower. So, but there's nothing wrong with that. That's the beauty of the market. We learn from all of this. You don't beat yourself up, you learn. And that's why we look at this stuff. It's not always there. There are not always actionable, strong signals that come out of it. But we want to pay attention for when that opportunity comes around. We're ready for it. We're ready for it. All right. So for this to go the other way, for those of you who want that setup in cyclicals that just took place in tech and growth, you're going to see these guys really go down the positioning ladder here. Okay. So like I give you an example, financials, 2 straight weeks, I think, of outflows where they had record outflows week over week over week, right? Materials, I think they had 1 week of outflows. So we got to start to see people really give up on these for them to set up like they did tech last month. It may not happen, but that's what we want to pay attention to. For now, there are trades. There are trades we can look for, trades. Anybody have any questions on anything we're discussing here before we get into some names? Right, we do have earnings season coming up. So that could be good and bad. For trades, earnings are going to be good in a lot of things out there, right? So it may help on the trade side. The problem is going to ruin some decent setups, guaranteed. It always does. Yeah, post earnings, that's why I think once we get through a chunk of earnings, as we usually do, that's where we really want to start to pay attention to this, because it's going to set up what to look for going into the fall. There may be a place to hide too if late August, September end up being tough. If there's something down here that they really capitulated and came out of, there may be an opportunity to hide somewhere. These earnings seasons, they come too quick, because they're so spread out too now. Good. But listen, we'll see. We're going to get a lot of information here because a lot of these reopening names, they've been dead. They've just been dead. I mean, look at like a Trip, right? They've just been dead. Nobody, they've been ignored. So you might see some interest come back into these things, for a week or two. You might see some interest come back into the reopenings in the names. They're blaming the Delta variant, the COVID thing. So you get some good news there. There may be nice trades in a lot of these reopening names. So my opinion, spread it out. Don't zone in on, 1 or 2 sectors. Be on alert for anything that's been in a little breather mode, because you may be able to catch a nice quick rally out of it. I just wouldn't expect the fireworks we just saw in tech and growth. I think even growth, guys, if let's say they rotate into reopening and cyclical for a couple of days, keep your eyes on the growth names off pullbacks, right? Like Roku. Let's say, there's a little more selling in this thing, and then you start to see sweeper activity come in off a few day pullback. I think you got to trade in Roku. You understand? Everyone is so keen on looking at one or the other. Everyone's so trained on that now, where I think now it's going to be more spread out. It's not going to be higher rates, lower rates. Choose your side. I think there are going to be pockets out there of momentum across the board where I think big tech needs to chill out. Yeah, Tree, it gets annoying. I'm tired. I'm not going to lie to you. I'm tired of it now. You know what I mean? I'm tired of it. Yeah, I'm just tired of it. I'm tired of it. Because it really, like, think of it, like, see, like, usually trip, you get this setup, you get sweeper activity, and that's it. That was your cue. But until they rotate back into reopening names, trip is not going anywhere. You understand? There's no shot that trip is going to go higher without money going into the reopening names. It's not going to happen. You understand what I'm saying? Like, that's what Tree's saying. They move in the packs, one or the other. So now, not only you got to be right on trip, you need whatever pocket it falls into to be on the right side when you own it. So it's a pain in the ass. She's not wrong. And just correlation in the market too is whack, right? Like, we used to be able to look at these sector charts and you'd have risk on sectors move pretty similar to each other, and risk off sectors just move, similar to themselves. Here, yeah, there's no rhyme or reason anywhere, right? You got financials, materials, and what was the other one? Whatever it was, industrials, right? They're moving together. You got tech moving one way, semiconductors, because they got cyclicals in them. They're moving one way. Energy, it's a commodity, but it's in its own little world. It's nuts. It's nuts. All over the place. Listen, this rotation, as aggressive as I ever seen it in my career, I'm not going to lie to you. I've seen rotation, before, obviously. I've never seen this aggressive. Never. But listen, that's what, and a lot of us want the correction, but that's what has kept this market up. This is why this market looks like this. Because usually what will happen, you get the majority of sectors, right, that look like this. Just they moved with the market, and then everything would pull back. Now they pause and they move money, to 2-3 other sectors. So you don't get that selling across the board, and you don't get corrections. These are your corrections, right? Yeah, it's like musical chairs. You're right. You're right. So anyway, listen, it could be a lot worse. You pull up a market of the NASDAQ or the S&P 500, or an NVIDIA, and look at this. Like, this scares you. You know what I mean? So it could be a lot worse, but I see tactical opportunities and names out there. I think, I think there are names to trade. I think the stuff you got to be careful of is this stuff. Whether it goes higher from here or not, is irrelevant in my opinion. You got to be careful, because if this is the stuff that keeps going, it's game over. Yeah, it's a tricky market. It's a tricky market. Well, there are perks. It's easier said than done. There are perks, and the perks are, what we were talking about, that tech setup. We gotta have the, not only the coconuts, but now these days in this market, you gotta have the ability to act quick. Once you see it, you can't take baby steps anymore. You know what I mean? Once we see it, once it becomes obvious to us, like, oh shit, they've capitulated in tech and growth. They want nothing to do with it. We need to start putting money to work now. There's no, let's look at the price action. By the time you start looking at things, these things, they just explode. How quick they get away from you. Like, look at this. Right? Like, here's where, like, you're noticing stuff, okay? And 2 days later, you're chasing a move to highs. Right? Roku was a laggard. We were talking about Roku. Technically it wasn't a laggard, but was a laggard compared to some of the other stuff that just exploded. Roku actually hung over here for a couple of days. That's why there were quite a few of you, and AMD, right? That's why there were quite a few of you who nailed these names. And who the hell, I thought, I'll be honest with you, I felt like there was a risk for a move like this, but I didn't think it was going to come all in one gulp like this. I really didn't. This was just a complete unwind. So, nuts. But it shows you how powerful it is, After NVIDIA got it, yeah. That's what I'm saying. I don't want to make it out like we didn't participate at all. We definitely benefited from it, but I'm just saying we were looking at this rotation set up right in front of our eyes. For a good few weeks, we were ready for it. So that's why next go around, when something sets up like this, I want to be ready. I want to be ready. But yeah, all these names had great moves. Great moves. Yeah, we were definitely ready. I felt like, especially on the swing side, you know what I mean? That's why I was trading like equity so much. I felt like I couldn't get my hands on calls. Every time I was looking at a name, it just like started to get away from me. Like I remember we were talking about that name Bill on one of the Sunday webinars. I was catching the August accumulation, looked good, and like it was right here. So boom, 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 and she's gone, without even a pull or anything. Oh my God, Deck. That was absurd. That was absurd. Look at this. Yeah, it was a crazy week. Like that 1 week was crazy. Even, a lot of us were even just day trading these names. They were ridiculous. They were ridiculous. So trust me, listen, anytime you find a way to make money, you're happy in this game. I'm not saying, you know what I mean? I'm not being ungrateful, trust me. But I'm just saying if you nail this type of rotation right with a little luck, you get lucky and nail this move right. Like I said, you a couple years you have in a month. Now you're going into earnings season. Why even stick your neck out, right? Nice and easy, no stress. No stress. Rest of the summer, earnings season, wait for another nice setup. You don't see it, chill out. All right, let's talk about a couple names. Did I talk about everything on the sentiment side? The only other thing you guys, I think I saw somebody asking, was hedge funds. And Gamma, which Gamma's nothing really relevant here. Here are hedge funds. Okay, so same thing. Elevated, in my opinion, not a problem yet, but right, you don't want this. You know what I mean? This is the stuff you don't want. So this is where, a lot of times they roll over, and that's what we want here. NDS, NASDAQ daily sentiment. Yeah. I'm sure after this move. And probably still going to go higher because it lags a bit. All right, so we need one of these timely, it's hard to even see a pullback, but we need at least a breather. Let all the good action happen under the hood. Let the indices get stale. Here's the Bova Bull Bear. Has been coming down week after week after week. That's more intermediate. Goldman. These have all been kept in check. They've all been kept in check. And Gamma, nothing really elevated, nothing too high. No real true signal there. Let's talk about a couple names and then I'll let you guys go. What are you guys looking at this week? There's quite a few names, nice setups. Yeah, Mar, again, these things are overdue for rotation. Overdue. A couple of them started to see a little last week. So you should see a little positive momentum out of these things. When do they report anyway? August, so you got time there. Definitely keep an eye on these names for trades, definitely. Snow, I think that cooled off too, right? Yeah. They report late September. Yeah, it looks okay. It looks okay. I know it's a pain in the rear end, but A, B, and B, this is a tricky stock, boy. I don't, sometimes it trades with reopening names. Sometimes it trades with growth high multiple names. I don't know, what it, what I mean? What to root for if you're in this name. But it looks good. It looks good. MGNI, I still like. I got stopped out of the equity. I was in equity. But if you happen to buy calls, it still looks good. I think you see it bounce here. If you don't own it, you could probably look for an entry here. Fubo, you know what I mean? I just be careful. I wouldn't go too down the ladder into those like EV garbage names. I'd stick with the more active names like this. Fubo, MGNI, Snows, even though Snow hasn't been any, what's another one? There's a couple other growth names that look, the Rokus I mentioned, all these names look like these are the studs, guys. Like if you want to play the class of the group, it's these guys. So if you don't have to go down the ladder into the crap, these guys are the ones that move the cleanest. They're the first to see flow before the crap. Look at this bill. This is a really underrated name, man. So you got a perfect breather here off a niner. Strong move. Roku we spoke about. All these names. MDB. Twilio. Just try to buy them red. Try to buy them red. But yeah, even MGNI, Fubo, those things look good too. Yeah, Bill, I'm telling you, this stock, if these software names, this is going to be an animal when they get hot again. This is going to be an animal. It's like kind of under the radar, even though it's a $200 stock with some big firms behind it. Like Bova loves the stock. Now it's just, the spot's a little different. You are getting a breather here. DT, right? We talk about that name a lot. Probably needs to chill out here now, but Team, yeah, Team is right up there. We always see flow in Team. Look, that looks good. That looks good. Tom Lee, Tom Lee, I think raised his target on S&P 500. He's looking for a little more upside, and then I think he's looking for, actually, He's looking for a little choppiness this second half of this month. Yeah. 4,600, I think, is his target. But he thinks July could be a little pain in the rear end. No problem, Parvis. My pleasure. But team looks good. All these names. What are the names you guys got? A lot of times you guys throw out good names. WW. Oh, yeah. That looks good. Nice niner here. Look at that. Looks good. WW. Caught some flow too, right? GM, right? You got when's earnings here, right? Earnings August 4th. You could see rotation here, you know, before earnings. Yeah, you could see a little run up before earnings. Yeah, the energy names, I mean, they all look good. They all look good, energy. Here's the one in energy. All right. You want to know what the big boys are buying? Right here. The real thing. FANG. Huge action. Huge order flow. Somebody's tattooing it. Hedge fund, somebody out there. Big guy. So watch this name on any dips, Fang. Rig. Yeah. Yes. Looks good. ExxonMobil, you know, I like it. I just think you need some patience with it. You know what I mean? Like if you're looking for bang for your buck, you're better off with these type of names. You know what I mean? What's the other one we like a lot of flow? I keep forgetting that symbol. Why? What's that energy name? No, it's a mid cap, like a CVE. I like. That's more smaller cap. CVE. You know there it is. CPE. This guy. You know this, like these names. They only catch good looking action when they really want it. As you can see with the stock price. Look at this. You know, so you buy this name on a dip or flow, you get a bigger bang for your buck than you are ExxonMobil. But I think ExxonMobil net goes higher. BP, Apache, Cop, all of them. Cop, look how good Cop looks. KMI, I'm not crazy about. I like the other ones better. These ETE, not ETE, ETP, is it? Wait a second, ETP. No, what's the symbol? ET, what did I say, ET? ET, there you go, thank you. COG, that caught some flow, another energy name. I saw somebody mention REI. That's more of a spec energy play. I think it goes higher. I think it goes higher. Love, you guys keep talking about this stock, Love, huh? What do they do again? They make sofas? ESG name. I mean, spot doesn't look too bad here now with the little pullback. It's had a nice move, though. Yeah, REI, you know, it's a little guy. It's a little guy. See, these names, the right way to play these names, you buy them when off pullbacks, you know what I mean? And you put them away. You don't try to nail the timing like you do some of the bigger names. You know, this rig. Because what happens is, you know, stock doesn't move, you throw it away, and then all of a sudden it makes a move all in 1 week. Yeah, REI is the better mover of the two, without a doubt. Without a doubt. This thing got hot here, if you remember. Look. So there's another one, I think, like the Wall Street bets, not the Reddit crowd plays that's been catching flow, ENG. Right? Is this energy? I think it is. Hurricane. Let me tell you something. How about this hurricane? Once upon a time, a hurricane stock, right? Now a behemoth, GNRC. Stock doesn't go down. Buy every dip. What a machine. I used to hear, all kidding aside, hurricane off news off the squawk that we listened to, and there would be sweeps that come in. And I used to play this GNRC every time. Every time I'd make 40, 50 cents off of it, off the hurricane momentum. Okay. And then it would just, come right back down, pump and dump. This thing became the best stock on the board, guys. The best stock on the board. You got to see their numbers. This is no pump and dump. Unbelievable. Really unbelievable. So anyway, that's the hurricane stock right there. But this thing's been running for ages now. Hold on, let me open this wide. Looks like seasonality still holds up. Seasonality overall takes a little dip this week, and then we get right back to favorable. So this week is not awful, but no edge. Yes, July is a month. Last week was one of the best weeks seasonally of the year. Thanks, Tree. Have a good night. PVH, let's see. I like it. Retailer, right, Jay? I like it. Looks really good. Yeah, looks good. And that's another group, the retail. I never talk about them. Because I don't know why, but you got some stocks that have really looked good. This Gap, right? It's legit. CPRI, that caught some flow recently, CPRI. This is reopening, right? So they sort of just been chopping around dead here. Look at this. But they all look good. Yeah, I saw Crocs. I mean, Gap looks good. Catches flow too. Gap looks really good. The reopening, if there's rotation into reopening, they probably come back into these things. If you like the retail names. Somebody mentioned the casinos. Here's the one, right? You want to play it smart? This is the one to buy if you're looking for reopening casino type play. I don't know. The flow is a mess. LVS. It catches flow, but it's all Tide, rolls, garbage. So I don't know. And I understand why you would be interested in LVS. I mean, look at this, right? But I'm being straight with you. The flow is a mess. And you got Macau in there, You got Macau. So I'd probably go with the others. MGM catches flow. That's been clean. What's Win been doing? Win used to catch a lot of flow. Doesn't even catch flow anymore. Win looks okay. Las Vegas has been heating up. But so what's the play on that though? Not Las Vegas Sands. Because you got China. That's the problem. China's tightening. What would be the good play on here? Right? This is it. MGM. No? Yep. I agree. I agree. Las Vegas Sands, you hear Las Vegas in the name and you assume, it's a pure play. It's more Macau than Vegas. Yeah, China's got some issues. They've been tightening already. So that's the problem. So you got to be careful. MP, let's see. Oh, this is the materials play. Yeah. Does look good. Now, catches once in a blue moon, I'll catch some sweeper activity. Not a lot of flow, though. Not a lot of flow. How are these guys looking? Let me see. Needed to pull back. Yeah, some of the big ones. Look at this. See, you had this bounce here, niner. Now what? Yeah, Amazon caught, quite a few short dated sweeps, right? That thing was a beast on Friday. Google. Look at this. Jesus Christ. And Apple, man. It should, the thing now should trickle down to the under the hood names. Let's see. We don't want to see it continue here, guys. I hope not anyway. Yeah, John, I wouldn't trust the flow in these names too much unless, listen, they're made for options though, so I don't want to badmouth it completely because you can put in what you're willing to lose and maybe you get lucky. But I wouldn't trust the flow in these things too much because like we'll see call buying and then an hour later you see put sweepers coming in aggressively. There's a lot going on in these names, there's a lot going on. So it's tough to trust the one round of action you see coming in. Yeah, you can play K-Web. That's if you want to be a little more conservative. But just know, listen, these China, they become biotech FDA approval names. It's almost on that scale. Put in what you're willing to lose, and maybe you get lucky. But don't go crazy. It's a shame too. It's a shame because, like we were saying, there's some names that are catching real flow. JD, PDD, even VIPs, but you can't. It's tough to trust any of these. Even VIPs. Pick one, roll the dice. Futu. Yeah. See, right? You come over the weekend, another piece of China news, and now if you're holding China stocks, you want to kill somebody again. So annoying, right, MS? I'm just tired of it. I'm tired of it. Yeah, it's not worth the headache. There's opportunities out there. It's not worth the headache. SE is not Chinese though. SE is whatchamacallit? Singapore. Bova had a note on SE. Did you guys catch it? They were gassing it up, boy. Yeah, and China's tightening too now, John. So they're on a different planet over there. Yeah, you got a little breather here, I see. Bova came out with a note on Friday, or was it over the weekend? I don't remember. Anyway, they gassed it up. They gassed it up. This is a good China name, but I wouldn't even buy this. Billy. Like this is a real China name, supposedly. But I mean, listen, Kathy Woods rolling the dice and quite a few of them, right? You just don't want to get too excited. You think Facebook rips from here? Listen, it wouldn't surprise me, but we don't want to see it. We do not want to see it. You know what I mean? We do not want to see it. When they're buying these names as aggressively as this, and they continue to do it, it's not a good sign for the market. Not a good sign. Yes, TSM. Look at this. Some real, I mean, listen, how long have we been saying during this rally that when is this thing going to consolidate? It's doing it right now. It's doing it right now. We see some flow in it, but nothing like we normally see. We see bombs go off when they want this. They tattoo it, right? When they want to buy this, you're going to see tattooing. They haven't tattooed it yet. But a lot of these semis look good. A lot of these semis look good. Oh, is that what's going on, Gordon? They're trying to make some move against Taiwan. Yeah. Hell yeah. This thing probably gets killed, no, Sil? If that ever happened. Sheesh. So you got risk here too. China risk. Pain in the ass, China. I don't blame you. I don't blame you. They're looking to move to the States. Yeah, that IPO just came public too, right? What is it? What's the symbol on that DD again? DIDI, right? Ooh. There it is. So now this thing is going to get killed? Just came public. Unreal. Yep. All right. The only other thing, we'll see what the Gamma Gang has to say. They're probably going to be on similar to our page. They'll probably say look for a tactical little breather and probably a buying opportunity if we get the breather sooner than later. That's probably what we'll hear from them, but we'll see what they say. Yep, guys, as always, I appreciate you guys taking time out, spending some time. All right. Hope you guys enjoyed your weekend. Have a good short week. FOMC minutes Wednesday, Fed minutes on Wednesday. That's probably the big event this week. I'll see the majority of you mañana. Same, guys. Have a good night.